Hello and a very good afternoon to you. I'm Rachel reporting live from Kalkine Studios. It's lunchtime here in Sydney, time for the mid-market pulse. Now, Australian shares slipped into negative terrain by mid-session, with the majority of sectors in the red. The equity market witnessed choppy trade as gains in property, mining and financial stocks were offset by losses in consumer staples, energy and telecom companies. By afternoon trade, the benchmark index, the ASX 200, was down by 2.3 points. The index did open higher today, tracking firm cues from Wall Street, but soon paired gains to slip into negative terrain. On Wall Street, all three benchmarks closed higher in overnight trade as investors cheered strong quarterly earnings results. The market seemed to have set aside inflation and supply concerns as quarterly results lifted investors' risk appetite. The S&P 500 gained 0.3%, while the Dow Jones rose 0.4%, and the Nasdaq Composite closed relatively flat. Back home on the sectoral front, 8 of the 11 sectoral indices were trading lower, while consumer staples, energy and telecom were the worst performers. The consumer staples sector was the biggest loser, falling by 0.8%, followed by the energy sector, which fell 0.65%. Among others, telecoms, consumer discretionary, tech and industrials also traded lower. Bucking the trend, REITs was the top performing sector with a 0.9% gain, followed by materials and healthcare, which traded marginally higher. So let's look at the top gainers and losers by the mid-session trade. Well, shares in travel business, the Flight Centre Travel Group, dropped 8.1% by lunch. Some of the other top laggards were retailer Super Retail Group, digital travel business Webjet, coal miner Whitehaven Coal and online retailer Redbubble. On the gaming side, healthcare firm Healius was the best performer with a 7.2% gain. Some of the other notable gainers were fund manager Perpetual, gaming machine manufacturer Aristocrat Leisure, engineering services firm the CIMIC Group and software business Appen. Well, now it's time for a very short break, but stay tuned to Kalkine TV. I'll be back with more trending market updates.
Tune in to stay updated while on the move.
We will tell you where the crypto craze has reached,
Where the property market is headed next.
what the world is doing to become more environmentally friendly.
Apart from tracking the daily market charter.
Be on top of the latest news and announcements.
With Kalkine TV.
Hello and welcome back. It's Rachel here, live from Sydney, and you're watching the mid-market commentary. Let's move on to some more stocks that created a buzz on the ASX so far today. Shares of supermarket giant Woolworths are down almost 1%. And that's after it mandated COVID-19 vaccines for all its staff. The mandate will apply to all of its 170,000 employees working in 1,200 retail stores. The deadline for the full vaccination requirement in New South Wales, Victoria, the Australian Capital Territory, Northern Territory and Western Australia is January the 31st. For Queensland, South Australia and Tasmania, they'll have a deadline of March 31st, and that's 2022. Now, shares of AMP jumped almost 5% following a business update for their September quarter. The financial services company reported Australian wealth management assets under management at $131.2 billion during the third quarter, ending September the 30th. Meanwhile, AMP Bank's total loan book increased to $21.3 billion, while AMP's capital AUM fell by 4%. Shares of oil and gas major Woodside Petroleum traded marginally lower after they released their third quarter business report. The energy company's sales revenue rose by 19% compared to the previous quarter. For the quarter ending the 30th of September, the company delivered oil production of 22.2 million barrels of oil equivalent. That was down 2% from the second quarter. During the quarter under review, the company also entered into a merger commitment deed with the BHP Group to merge its oil and gas portfolio with Woodside. Moving on, and shares of healthcare firm Healius rose almost 7%. That's after they released details of their annual general meetings for the 2021 financial year. The company informed its shareholders that it reported 44% growth in its revenue in the September quarter of 2022 on the back of COVID-19 testing and a stronger performance by all business segments. The company says that the pathology revenues rose as it conducted more than 40,000 COVID-19 tests each working day. An Australian energy major, Santos, saw its shares trading 0.4% lower by lunchtime today, and that's despite reporting robust earnings in the September quarter. The reported quarterly sales up 6% compared to the same period last year. The third quarter production dropped by 3% compared to the previous quarter. And shares of fund manager Perpetual rose over 4% after they reported robust earnings in the September quarter. Assets under management grew by 2.7% in the third quarter. Assets in the company's international fund management unit grew 2.6%, while the local business grew assets 3%. An Australian gambling machine manufacturer, Aristocrat Leisure, their shares rose more than 5%, headed towards a new closing high. The company has received investor support for its $3.9 billion takeover for UK-listed gambling software group Playtech on Monday. The company said prior to markets opening it had secured the capital required to back the Playtech deal, which will be funded by a mix of equity, debt and cash on hand. Well, that's a wrap for the show, but keep watching Kalkine TV for more trending market updates from Australia and around the world. I'm Rachel, signing off for now.